Hi, I'm Timothy Pope and this is the Shanghai Finance Update. A-shares were a bit up and down this week, but thanks to the hype over AI stocks, they were much more up than down. The Shanghai Composite Index has now pretty much made back all the ground that it lost at the beginning of the year, adding a bit less than 0.5% today. Tech obviously continues to dominate, and while there have been signs that some investors think the market's due for a correction, it hasn't started yet. There are quite a few listings on the Shanghai Star Market and on the market down in Shenzhen, which have seen their stock prices double over the past 2 weeks. Montnet's cloud technology is one such. Earlier this week, it looked like the tide might turn on this stock and investors start to book profits when an institutional player unloaded a sizable chunk of stock late yesterday. But that didn't deter retail investors who saw it as a chance to buy the dip, even if it was only a small dip. And this stock was up 10% yesterday and again today. This is not an isolated case either, despite the fact that securities firms are saying that the crowded trading in this space is starting to stretch valuations at some of these firms. On the rest of the market, the rising tide didn't quite lift all the boats. Real estate stocks put a cap on gains for the indexes. Investors will also be watching policy announcements next week after reports that President Xi Jinping will be chairing a meeting with Chinese business leaders aimed at improving private sector sentiment.